My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to save some money here. My job's not just to entertain, but to put days like this in context, because they're not easy. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. So you're probably asking yourself, when is it safe to start bottom fishing? Maybe you started already. Well, that is the question after another hideous day. Dow plunging 346 points, S&P down 1.34%, and the darn nasty Nasdaq. Sell. Nosedive 2.11%. The answer? Well, there are a lot of different ways to spot a bottom, and while a bounce might be in sight, it sure makes sense after all this relentless selling. An actual bottom, it may commit, where you can commit a lot of capital? No, too many stages away to feel on solid ground. So let's go outside the world of dollars and cents and talk about something that we may all understand from psychology class. Yes, let's talk about the 5 stages of stock market grief. We got denial, we got anger, we got bargaining, depression, and finally acceptance. Right now, even after a 6% decline, we still got a ton of denial, and that's just the first stage. People don't want to believe the sell-off is real. The market's been so good for so long, and many newer investors have never seen this kind of pummeling. So the downdraft does seem pretty surreal. And hey, denial's easy. We've got the pandemic on the ropes thanks to the vaccines, right? So that's positive. And there's the prospect of a big stimulus bill, more checks coming our way, positive, with some of that money flowing to the stock market like it did last time. Denial always sounds reasonable, though. And I was going over this with Helene Meisler, some fabulous stuff on Twitter she does. I've known her for 30 years. It's too early. We want to convince ourselves. That's what we're doing. We're convincing ourselves that any decline is merely an interlude. It's a dip that needs to be bought. But when the economy reopens, that changes everything. We already have some nascent commodity and wage inflation in the system. Once you throw in a huge stimulus package, and suddenly lots of investors are worried about an inflation scare, like we saw in late 2015, the last time the economy was coming out of the doldrums. See, at that point, Fed Chief Janet Yellen raised interest rates, and the market took it on the chin, even though we all knew it was going to happen. Well, this time should be different. I mean, today, our more dovish Fed Chief Jay Powell took a different tag. He acknowledged there could be some uptick in inflation. He said, don't worry about it. He practically told us to relax. So what happens? Would it have been better if he'd said we had to raise rates? Probably, because the bond market reacted viciously with long-term interest rates spiking. And that's what took the whole stock market down. And believe me, just go look at his talk. You'll see what he says, and then watch the averages. It's cause and effect. In short, stocks are getting hammered because the bond market vigilantes, as we call them, are angry. We've got millions of newer investors, though, who don't even understand, and I don't mean to sound condescending at all, but they don't understand the connection between bonds and stocks. And I got to tell you, I didn't understand it either. Going back to the 5 stages of grief, these people are in denial about how bonds could impact their stock portfolios. And I get that. See, I remember when I was a kid, I got to Goldman Sachs in the early 1980s. There's a fellow, David Darcy, who's regular on CNBC, and he explained to me that I needed to check how the bond market was doing before I said a word about stocks to any clients. I didn't want to hear that. I mean, I was adamant. I said, listen, let me tell you something. I didn't chief him, but I said, let me tell you something. If a company's doing well, its stock's going to go up. Darcy then chiefed me. He sat me down, and he walked me through how the bond market represents the sum of all fears about inflation, supply, and growth. Okay, oversimplification. But all you need to know is that the professionals are taking their cue from the bond market, not the much smaller stock market. So you can't afford to be in denial about this linkage. You're just going to get hurt. Otherwise, you'll never be able to understand what's really killing the stocks of the PayPals or the Home Depots or the NVIDIAs or the Telladocs. And it's not their business. It's the bond market. Sure, if Jay Powell turns out to be right, if there's no tsunami of inflation, well, then we got a different story. I mean, then we probably should be starting buying today. But it could be months before we even know it, if that's the case. We still got to go through these stages. You just do before the market can bottom. And we're early on in the process, sadly, for many stocks in this market. Some are not involved with this, but many are. Denials everywhere. This was a day that started off with Ron Barron, fabulous money manager, coming on Squawk Box and announcing he sold some Tesla. I mean, a stock he loves, a stock that he discovered, a stock that he is Tesla. But he had to do it in order to right-size his position. That's a technical term, right-size. As a former portfolio manager, I can tell you Barron's doing the exact right thing. He had to trim his position or risk becoming the Tesla fund, which is what happens when you own too much of one stock, simply because it's been such an incredible outperformer. It tends to dwarf all your other stocks. However, the moment Barron announced that he'd sold part of his position, there was a wave of denial from Tesla shareholders who've watched the stock sickening slide. They didn't want to believe it mattered even that Barron sold. I get that. When I pointed out that he had sold only to stay diversified, people were furious that I even pointed it out on Twitter. Their attitude, why bother mentioning it unless you, Cramer, want the stock lower? I mean, I don't know. It makes no sense to me. I mean, why deny the obvious? Too many of the newer investors out there, the portfolio management stuff, well, they don't get it. It doesn't register. As they see it, their biggest Tesla champion was letting stock go. Denial quickly bled into anger. Stage 2, anger at Barron for seemingly abandoning the cause, anger at me for pointing it out. Anger is better than denial, but it's still only the second stage of Tesla grief. Where's the bargaining? Where's the depression? Where's the acceptance? I mean, the stock has fallen from 900 to 621. Look, during the last big inflation scare from 2015 to 2016, the total debacle, and my MO for the moment, my analog, so to speak, we got all 5 stages of grief before we bottomed. It was ugly, plumb ugly. And we only accepted what had happened after becoming incredibly depressed from the endless downside surprises created by Janet Yellen's rate hike. I remember being out in San Francisco, which I absolutely loved, and I was like, oh, man, I don't even want to come to work. And I've been wanting to come to work for 67 years, give or take. We tried to bargain with the animal spirits of the market all throughout that period, desperately holding on, praying the selling would stop. Please stop selling. Stop the deals. Stop the IPOs. Stop everything. Didn't work. When we finally reached the grand give-up, the crescendo of selling that washes out the weak hands, many high-quality stocks were down, actually almost all, were down 30 to 40% from their highs. 30 to 40%. Some great ones have been cut in half. No one wanted them. Because we had accepted that the stock market is an evil, horrible place. Now, is there a way out of this vicious cycle downward? Again, this time is different because the Fed really doesn't want to tighten. Ideally, Jay Powell will be proven right. The economy will grow, won't overheat, causing excessive inflation, and that's the optimal scenario. If Powell's right, then today could very well mark a bottom, but we can't tell yet. I think we don't stop falling until we get more anger, more bargaining, and more depression than we've had. How do you measure these emotions? Well, I have ways to do it. I use the proprietary oscillator that I've mentioned a lot of times from the S&P. That measures where we are, quantifying the level of selling pressure, or the level of these. When we reach -5 on the oscillator, that tells you we're pretty depressed. When we reach -7 or 8, that tells you we've accepted it. This evening, we're only at -1.5. I don't know, kind of here. Which brings me to the hunt for another way out, what I call the crescendo, the whoosh. See, there is a shortcut through the 5 stages, one that takes you from denial straight to acceptance. But if it comes at a real cost, people, you need a gigantic move down. And it's got to occur in 1 or maybe 2 days. I'm not talking about a 1 or 2% decline like today. I mean maybe like a full-blown 4, 5, 6, 7% whoosh, where there's a collective sense that the market's toast. No deny it, nothing to be angry about, no one to bargain with, depression ongoing, and acceptance that I am never, ever going to own another stock again. All that happened in the early February of 2016, only to be followed by what? You know what followed it? A brand new leg up as the bull market started all over again. And then it went on for years. And you made a ton of money if you stuck with it, rather than accepting that it's the worst, most horrible thing that has ever happened to you. So how do you handle the 5 stages of grief from here? We're going to get bounces that make people feel like their bargaining has succeeded, but it hasn't. As I told people today in my ActionAlertsPlus.com call, if you lighten up into one of these things, right, when a little spikes up, you're going to be ready for the moment of capitulation, the crescendo, the acceptance that marks the trough. And most people are not light enough right now. They have too much merchandise, bottom line. If you want to be able to bottom fish at lower levels, make sure you got a little cash to be able to do it with, which means on the obvious rallies that we got, including this morning, well, you know what? You take a little off the table, because the real rally can't begin until we work through these 5 stages of grief and get down to where you never even want to hear a word from me again. Once that happens, though, well, I mean, you probably do want to hear a word from me, but not in anger. Once that happens, though, you don't want to miss it.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.